Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Mortgage rates are up all across the board, with the big six banks raising their mortgage rates last week and the other monoline lenders inching their rates up as well. In fact, mortgage rates have risen so much in the past year that there's been a switch, with buyers now having to qualify at their contract rate, the rate they pay, plus 2 percentage points, rather than the 5.25% that they've been qualifying for the past couple of years. With the Bank of Canada just recently raising its own interest rate by 25 basis points, and with our inflation rate currently at 5.7%, many are predicting that this is not going to be the last of the rise in mortgage rates, that there will be quite a few more mortgage rate hikes on the horizon. So what I want to do today is go over the major types of mortgage rates and how they have risen since the Bank of Canada raised its rates, as banks and mortgage lenders not only raised their rates in response to the Bank of Canada, but also in anticipation of further rate hikes down the road.
Need to get ahead of this now.
And then we'll go over some brief tips on how to protect yourself in the future. We will continue to have updates on this channel on Canada's inflation rate, on the mortgage rates, on the Bank of Canada's interest rate, and on the overall Canadian real estate market, as we start to see the effects of these rate hikes on the mortgage market and on Canada's real estate in the future. Click like and subscribe if you want to get those updates, but for now, let's get into these rates. So the first rate to go up was the insured mortgage rates. Insured mortgage rates are where you put down less than 20%, you qualify at 25-year amortization, and your qualification rate is either 5.25% or 2 points above your contract rate. Last month, that rate had risen up to 2.79, and at the time of this video, as rates are changing every day, at the time of this video, that rate is now 3.39. So we're looking at a 0.5% increase in just a little over a month. With the average price of a house in Canada now hitting around $816,000, that actually changes the amount that you would pay for a mortgage on that average house by over $200 per month. $200 a month payment difference in just over a month. So we can see it's just a 0.5 percentage point in 1 month's time, but that can make a big difference in the average monthly mortgage payment that you would have going forward. Next up, the insurable mortgage. The qualifications for an insurable mortgage are very similar to that of an insured mortgage, with the only difference being that you have 20% down and that you don't have to pay the mortgage insurance.
Sweet.
So last month when we spoke, the best insurable mortgage rate was 2.94, and that rate has actually risen substantially up to 3.59. So on the insurable side, where you don't pay the mortgage insurance and you're required to have 20% down, rates have risen well over 0.5% just in the last month. And that continues on when we look at the uninsurable rate. Uninsurable mortgages, that's where you have 20% down and you qualify at 30 years amortization, or whenever you decide to take money out of your house through a refinance. That's considered uninsurable because the banks, the mortgage lenders, can't get insurance on that type of mortgage. Those have also risen. So last month we were looking and the rates were at 2.94, and that has actually risen to 2.49. So even with the uninsurable rates where you take money out of your home or qualify based on 30 years amortization, we're still looking at more than 0.5 percentage point rise over the period of a month. So clearly the banks and the mortgage lenders are really responding to the Bank of Canada's rate announcement.
We're going to lose all of our money.
And are hedging that there's going to be more rate hikes coming in the future. And the best way to protect yourself from these rate hikes is to get on things early. I have a few clients who got their pre-approvals, got their rate holds in December, and they get to use that rate hold rate that they had in December, not the current interest rates that are coming out now from the big banks, from the mortgage lenders. So that's going to save them 0.5, 0.7% on a 5-year mortgage, which will end up equaling almost $10,000 depending on the mortgage side, on the mortgage size. So it's definitely in your interest to get on things early. If rates do drop, say those pre-approvals that I had out in December dropped and the rate was much lower now, there's nothing stopping you from applying for that lower rate. So you do kind of get the best of both worlds just by getting on it early. If you have a mortgage renewal coming up, banks and mortgage lenders can get your rate hold in 120 days at minimum before that mortgage renewal is due. So the sooner you have that application in, the sooner you have paperwork in hand, the sooner you will be able to take advantage of these, what I'm sure we will be calling low interest rates in a few months from now.
Those were the days.
There have been many predictions over how many times the Bank of Canada is going to raise rates. We talked about on Monday, Oxford Economics saying that the bank was going to raise rates 3 times this year. And there's been other predictions with Scotiabank saying that we're going to be seeing rates as high as 3% by the end of 2023. So rate predictions are all over the map, but almost nobody is saying that rates are going to be going down anytime soon. In fact, as our inflation rate continues to go up and up, it's more and more likely that we're going to be seeing higher rates more and more so into the future. So the best thing you can do is get on it early, at least for the foreseeable future. There's no downside for getting on something, getting that rate locked in early and taking advantage of what, like I said, will one day be considered the low mortgage rates of 2022. We'll see. All things being equal, if we've learned anything over the past few years, all things are often not equal.
That doesn't make any sense.
But we will have updates on these mortgage rates, on the Bank of Canada, on Canada's real estate market as this unfolds throughout the year. Click like and subscribe if you want to get those updates, and thanks so much for watching.